Hello, traders. Happy Monday. It is September 16th. This is the week of FOMC. This is my update on my journey using the ICT Charter Model number 12. And so since it's in many regards a pattern recognition type setup, I feel it's okay for me to track it on multiple assets. So I'm looking at oil, ES, gold, and NQ. And the only trade that I got this morning was in gold, and I'll walk through that in a second. You can see my buy limit order still on oil that has not triggered. Price took off without me. We'll also cover that because I think there's some possible lessons to learn here. But without further ado, let's look at gold. So what had happened is price came down into, we had this higher time frame order block, 15-minute order block, where you could see we came down into it, displaced higher. We returned to that 15-minute order block, and then started displacing higher. Now, I think the word displace, you expect like a big move. Granted, this is not a huge move, but this left a fair value gap. This is the first one. So when price tapped into it, I went long. You can see I took a little heat. Price came back down. I was using a $3 stop loss on gold, and originally I was targeting a $6 profit. But as price was starting to unfold further, I realized we have midnight open right here. This is, yes, a higher 15-minute order block, but I've had greed issues in the past and demanding too much, and I thought, you know what, I'm just going to get out early because price, what it did is it took out this high, and so then I moved up my stop loss, and you can see I got out at 2611.9 and got long at 2608, so 08.1, so not quite, well, I guess, yeah, a little over $3.80 profit. If I would have kept my profit target where it was originally at, it would be at 2614.3. The reason being I wanted to do 2 cents above just to cover the spread. So it may still hit that, but like I said, I got out early. I feel good about it. I followed the plan. I waited for price to come back down to a higher time frame order block and start to show a move. Maybe it's better to say, instead of displacement, a move away from it that left behind a fair value gap. So this turned out to be a nice trade. Now let's look at oil. And I did take that trade not just in demo. I took that in my Apex accounts. So you can see the same trade here on the Ninja Trader. So this big green area, that's that 15-minute order block that price came into, and then it was coming out, but left behind that fair value gap. You could see I got long, and you can see where I got out. And yes, I am copying this across different accounts. And what I'm doing is I'm trading it very small in 2 accounts, and I am increasing the size in the other 2 accounts. So I'm basically trading 1 micro in 2 accounts, and then I'm doing 2 micros in another account and 3 micros in the last account. So I'm trying to leverage the strategy to keep myself, a little ahead of the game if I continue to, or as I continue to just keep doing the right things over and over again. So, but my main focus is on just the main accounts, the leader account that would trigger the trade. So interesting, you can see this thing is getting close to that 26.4 would be my full take profit. But like I said, I'm learning to be satisfied with enough because greed has just tore me up in the past. So, but oil was really the one I wanted the most because it had the very similar situation. We had this 15-minute fair value gap. that price was working in, came out, returned back to it, and then started displacing higher, leaving behind some fair value gaps. Now, for ICT's Model 12 instruction, he says you go for the first fair value gap plus the spread. And I had this fib on here as well, just so I could see like a premium and discount, but I did not have I just had the equilibrium level on. And I since have added the 62% retracement because I just found this really interesting that price did not get down to this fair value gap. And I'm not trying to tweak Model 12. These are just observations along the way so that I can collect more data and possibly take this into consideration in the future when my general price action pattern is developing, that it might give me opportunities to get in. So if you look at what happened here, the anchoring from this low to this high, the 62% retracement would completely cover this fair value gap and a little bit more, right? It doesn't get into this fair value gap at all. But look at that, 69.02 is the 62% retracement. And when I hover my mouse over this candle and we look at the low on the top left of the screen, the low is 69.02. And then look at it, boom. So yeah, I didn't get to participate. You can see my order is still just sitting there waiting. I'm going to cancel it out. No sense in, I missed the boat. It ran. And even if it comes all the way back now here, the fact that I had a good trade in gold that provided me the earlier setup, I'm happy with that. But I still think there's a good takeaway. And then just based on, again, ICT's Model 12, it's just really nice to see the overall price action play out. Price came down, it tapped it again, and then we really start to see some displacement, a little pullback, and just massive expansion right here. So I know it's not going to work every time, but it's nice to see it play out, especially since I'm just really trying to do my best to be 100% focused on this model and this model alone. So while it did not present an entry inside of the first fair value gap, the second one would have been great. Not to mention not that Model 12 takes this into consideration, but like once you learn about breakers and things like that, you can't unsee them. It's interesting to like look at the breaker here and see that like it all lining up. So just little things. So anyway, I still, this played out nice on oil, even though I didn't get in the trade. The gold trade was the trade of the day for me. And it looks like it is nearing hitting that level. Let's see, what's the highest it's gone? 26, yeah, 0.4. So this, well, it probably has to go to 0.5 for if my order would have been on to still trigger. But you can see we're inside of a 15-minute bearish order block. Gold is basically at all-time high. I'm not saying it's time to short it, but I do know that looking at the COT report, that the commercials are selling, and we know that they like to sell when prices are high, not when they're low. So no surprise that price is going higher because they are unloading their positions. And there you go. It would have fully delivered to my overall TP. But like I said, I am getting myself comfortable with this strategy, and it's meant to be a low-hanging fruit strategy anyway. ICT doesn't teach to go to like two for one or 3 for 1, and so it's been my prerogative that I'm trying to get a two for 1, and my main reason for that is just because this is overall an institutional order flow entry drill type of trade. And look at this. I just saw this right now. So here's that order block we started to expand in, right? It's all hindsight, but compare this move that leaves behind this fair value gap with it coming down, tapping this again, and then look at these fair value gaps. What does price do? The first fair value gap, institutional order flow entry drill right there. Oh my gosh, I missed this. How did I miss that? That would have been a 30-cent drawdown So if you used a $3 stop, you're way down here, and $6 take profit, no problem. So, ooh, that would have been sweet. But anyway, didn't get that. I got something. I'm happy with it. I'm continuing to learn from the model. So, traders, be careful. FOMC is on Wednesday. I hope that you are making the progress that you want in your trading. I hope that you are taking more from the market than it takes from you. May the ticks be forever in your favor. Peace out.